This is Fundamentals of Accounting, CDEL 503, Module 1, Study Session 1. What is accounting? The expected duration of this course is 1 week. The word accounting could mean different things to different schools of thought, but to the stewards, it means to give detailed information about how the responsibility placed on someone is dutifully carried out, managed, or handled. This unit, however, will look at accounting from a general view of what accountants do. As we proceed in this unit, you will learn about 1. Terminologies, concepts, and conventions of accounting. 2. Purposes of accounting information and its communication. And 3. Uses of accounting information. Learning outcomes for this study session. When you have studied this session, you should be able to 1. Appreciate the basic terminologies, conventions, concepts, principles as used in accounting and the purpose of accounting information and its communication. You should also be able to identify the users of financial accounting information and their interest. Accounting. To the accountant as stewards of business organizations, accounting is the process by which data relating to the economic activities of an organization are gathered, recorded, classified, measured, summarized, and interpreted with the motive of communicating true and fair information about the organization to the users of accounting information. From the profiled definition, financial accounting is concerned with 1. Gathering the data are picked from originating source documents like bank teller, water bill, receipts, and so on. 2. Recorded, gathered data entered into the appropriate books of account. 3. Classified, record data are analyzed based on its associated origin and are grouped together, e.g. return outward and opening stock has purchases as its associated origin. 4. Measured, every accounting transaction is measured in its monetary involvement. 5. Summarized, the outcomes of all economic activities are summarized by money measurement. And 6. Interpretation, the meaning gathered data conveys is communicated to the owners of the business and other stakeholders. Terminologies, principles, concepts, and convention of accounting. As you surely know, every system has its own choice of words which might not originate from the system but has a unique meaning it conveys to that particular system. For example, bookkeeping would convey different meaning to a librarian and another to an accountant. This meaning it conveys is not particular to the original English meaning but skewed to the professional reasoning. Similarly, other terms used in the field of accounting. This makes the study of accounting terminology very pertinent. Accounting terminologies is the ability to give, that is, present and understand accounting meaning to everyday words. The accounting terminologies are developed from the conventions, concepts, and principles of accounting. By convention, we mean the norm of the accounting profession, that is, a pattern of accepted behavior or practice. Meanwhile, concept is an idea that underlies an action or practice. The combination of accounting conventions and concepts constitutes the generally accepted accounting principles, GAAP. Before judging the correctness of the accountant's treatment of a transactional report, the accountant checks whether it conforms to the generally accepted accounting principles. The following are some of the accounting principles. 1. The principle of double entry. Every financial transaction has two aspects and entries are done in this light. 2. Business entity. The business is seen as a separate entity that has its own life and the reports are those of the business and not of the owners. 3. Going concern. It is assumed the business will continue to exist, that is, the business entity will not liquidate. 4. Matching concept. That is, the costs of earning revenue are matched against the revenues to calculate the income generated for the period. 5. Money measurement. There is a stable monetary unit that does not require any adjustment. And 6. Consistency. Accounting treatments are consistent for a time period under consideration. Others include conservatism, prudence, periodicity, materiality, realization, objectivity, and so on. Purpose of accounting information and its communication. You have seen so far what accounting and the principles of accounting is all about. Bearing in mind what accounting is, we can imagine what the purpose of this ideology is. Essentially, the purpose of accounting is to generate and communicate timely accounting information. Accounting information is helpful in deciding between different courses of action, which results in informed decision making. It serves to lessen the uncertainty intrinsic in the business environment where decisions are taken about the future. It further reduces disorganization based on the assumption that chaos exists where there is no information. Timely accounting information is a management of uncertainty or risk in a situation. This implies that the greater the uncertainty or risk, the more accounting and other relevant information are required. Let us take an activity. From all the definitions given, attempt to define accounting in your own words. Pay close attention to the diverse terminologies that have been used by other authors. You may share your definition with your classmates for review. Time allowed for this activity is 1 hour. Identify the users of financial accounting information and their interest. Financial accounting information is of interest to a variety of users whose information needs vary. Among various users of accounting information are owners/shareholders, managers of the firm, lenders such as banks, customers, suppliers, employees, and government agencies such as tax and regulatory authorities. Owners/shareholders. Owners or shareholders need information on the performance of the firm, whether it is profitable or not, including the financial position of the firm. Managers. Managers of the enterprise need information on all aspects of the firm. Timely, complete, and regular financial information will enable managers to monitor performance and compare actual outcome with anticipated results and take corrections where need be. Lenders. Banks and other lenders of resources are primarily concerned about information regarding the ability of the business to generate the liquid resources to make necessary interest payment and repayment of principal. Customers. The information required of the customers relates to whether the firm would be able to settle the claims of its customers as and when they fall due. Suppliers. Suppliers primarily need information regarding the liquidity of the firm, as this would determine the firm's ability to pay for goods and services supplied to it on credit. Employees. Employees need information concerning the financial position and profitability of the firm, as these would influence the employee association to demand for improvements in employees' benefits and other welfare packages. Government agencies. Government agencies require accounting information regarding profit and adherence to provisions of requisite regulation affecting the specific industry the firm is operating in. Profits attract government regulation on taxation and so on. Question. Let us look at innocent group of companies. Who are those that will use accounting information in the company? Answer. The users of accounting information are 1. Owners and shareholders. 2. Managers. 3. Lenders. 4. Customers. 5. Employees. 6. Regulators or government agencies. Box 1.1. Principles of accounting. The following are some of the accounting principles. 1. The principle of double entry. Every financial transaction has 2 aspects, and entries are done in this light. 2. Business entity. The business is seen as a separate entity that has its own life, and the reports are those of the business and not of the owners. 3. Going concern. It is assumed the business would continue to exist, that is, the business entity will not liquidate. 4. Matching concept. That the costs of earning revenue are matched against the revenues to calculate the income generated for the period. 5. Money measurement. There is a stable monetary unit that does not require any adjustment. And 6. Consistency. Accounting treatments are consistent for a time period under consideration. Let us summarize this session. At the end of this study session, you have been able to learn the following. 1. Terminologies, concepts, and conventions of accounting. 2. Purposes of accounting information and its communication. 3. users of accounting information. Self-assessment question. Now that you have completed this study unit, you can assess how well you have achieved its learning outcomes by answering the questions below. Question 1A. Write your understanding of accounting convention, accounting concepts, and accounting principles. 1B. What are the informational needs of the users of accounting information? Question 2. The chief accountant of Dangote Group of Companies has just compiled the organization's financial statement for the last 5 years. Who are those people that would require the financial information in the report? You have come to the end of study session 1.